a Real Estate Investor Association podcast. We do this every week on Tuesdays at 3 p.m. Pacific, 6 p.m. Eastern. We live stream it on YouTube, Facebook, and other social media, and record it there as well. And we do this is in conjunction with Lloyd Siegel's program, where he has the Vendor Expo every second Thursday of the month in Los Angeles, the second Wednesday of the month in Ventura. We just had it last week. It was fantastic. And I was a great speaker there, and we have an expo, about 250 guests and maybe 50 vendors, a little lighter last month because it's the holidays, but a great opportunity to meet people and meet good vendors and learn how to grow your business. We do this live stream every week to talk about real estate and learn and then network together. And the real reason I did this, I launched this about 3 years ago when the pandemic started, was because I felt that it really is important in real estate. It's all about networking and learning at a higher level, which means more people, and learning from other people's mistakes and shortening the time period from investment to investment or sale to sale if you're a professional. And so we launched this, and I did this, like I said, we launched about a little over 3 years ago. It's been fantastic. I really enjoyed it. One of the things I want to talk about today was who here besides me has noticed any discussion on the topic of cryptocurrency? Anybody at all notice anything? Anybody hear any news about it? Is it just me? So, you personally, I actually meant to get very involved in it years ago. I started setting up a mining computer because I was working in an office. I had a nice computer at home, and I never finished it to mine Bitcoin. That goes back about 2012, and I just heard about it from LAProbate on the radio and thought it was exciting, and I just never pulled the trigger. Never thought it amounted to much anyhow, and that was a mistake. And along the way, I would call myself a techie. But I never could see an investment reason for cryptocurrency. I could see the fun, the hype, the hobby, but I never saw a business opportunity where I could do something that would generate value that would lead to long-term money. So it doesn't surprise me that we have this experience of where something that seemed to be a very valuable $28 billion evaporate. It's going to affect a lot of people. So the question is, how is it going to affect real estate? And one of the things that's interesting as I comment on the real estate market weekly is I think that, oh yeah, Paul, thank you for reminding me. Feel free to put your contact info in if you want to network with people, your name, your phone number, contact info, pitch whatever property you have. Glad to have you do that here. Whatever happens in real estate affects us. When you look at the real estate market today, one of the things that's very different from 2008 or 9 is in 2008 or 9, real estate led the economy down the tubes. And the rest of the market got pulled with it as real estate craziness ensued and the market blew up. It took down banks and investment houses and insurance companies and then eventually homeowners with it and the economy as a whole. And I think this market's, so one thing is very different. A lot of things are different. One thing very different is the real estate market is more affected by the economy than causing the economy. It was trailing the economy, I think, up. And prices didn't go up as fast as inflation in terms of real inflation. And now prices are coming down, but maybe not as fast as people might have expected because they didn't go up as much as they would have otherwise. And so I think you have housing market following the economy, not leading it. That said, when $28 billion is wiped out, anybody who bought a property because they had cryptocurrency now is rethinking it. Anybody whose income was based on cryptocurrency now under pressure. And you see all these tech companies laying off people. And so you have people who have jobs, and I'm sure they have some cash and some severance packages and such. But inevitably, it's going to affect the real estate market. You see major retailers cutting inventory now, even though their sales are up, in anticipation of a recession for next year. So inevitably, it affects real estate, and I think you have to pay attention to it. And I, every week, watch inventories, which are still low. I watch delinquencies, which are still low. I watch prices, which are adjusted down a small bit, but have not adjusted down to pace that suggests a crash. So inevitably, the crypto market's going to affect us. But I think one of the things is, so what are you going to do to make money? Or where are you going to put your money to make money? So cryptocurrency was really two different things for some people. For some group of people, it was their income. They were selling other people to get into crypto, or they worked for a company, an exchange or something, and they wanted to encourage other people to grow their market so they made more money. Or a store of wealth. Well, real estate has been traditionally a great source of income. I'm a real estate broker. I've been in the business for 36 years in various businesses, and a great store of wealth. We have on the call somebody who invests in storage. We have other people who do higher end luxury flips. So I do multifamily on larger projects. And so it's a great place to put money that you've made, and so your money is working for you. I want to say, though, that because of what's happening, which I think is the inflation and the recession and I don't know, we're going to war with China, we're not going to war with China, Russia flips a missile at Poland, is Europe going to war with Russia? With all the craziness in the world, this is the best time ever to invest in real estate and to make money in real estate as an income source, by far. And if you've been with me for the last couple of years, I've been saying that, I think, every week. I think it becomes clearer to me every week why. And I actually made a list of reasons why. And it seems to be counterintuitive, but I actually wrote 5 reasons why it's a great time to buy, 3 why it's a great time to sell, 3 why it's a great time to invest, and 4 why it's a great time to be in the market. So I'd like to list them to you, and I'd love for you to tell me I'm wrong on these. Reasons why it's great to buy real estate right now. 1, rates just declined. Sellers were on the market last week, facing a 7.25% interest rate market for buyers. Today it's down to 6.625, about a 0.5% drop, or a little more. Number 2, a little more inventory than might be otherwise. Maybe not as more than last year, maybe not more than 2 years ago, 3 years ago, 4 years ago. Still tight, but a little better than last year, a little easier than last year. Number 3, a little less intense negotiations. Everybody, when they buy something, want to feel good about it. We all want somebody to kiss us when they make love to us. And sometimes when you bought a property the last 2 years, sellers could be rude. They say, hey, screw it. We're not going to give you one concession, not a nickel. If there's a gum wrapper on the ground, we're going to not lower the price. We're not going to pick it up. We're going to charge you for it. And you had to put up with it last year, not this year. So the negotiations are less intense than they were last year. Number 5 is you have the opportunity to stand out from the crowd. Because with all the uncertainty now, there are buyers still making offers on properties. But if you make an offer, you make a strong, clean offer, you're going to stand out. There's less offers, you're going to get attention. Whereas a year ago, I would get an offer or two, and I would just sit on it I did my job, but I advise the seller, let's just sit for a few days, knowing there'll be 2 or 3 or 4 or more behind it to fill it up. Now, if you have an offer and it's complete and you do a good job, you're going to get attention from the seller. And 5, this is the big one, lenders are more available. I've been in this business since 1986. I started as a lender. In my opinion, there's no group that's made more money doing less work than mortgage lenders over the last 15 years. Rates just came down, and they basically took the Federal Reserve inertia and turned that into income year after year after year. And it used to be kind of a joke that people would just refinance the same customers, and in the last few years, it became an industry. And in my experience, look, I sold in the last couple of years, 100 or so houses in the last 3 or 4 years. I haven't had one lender approach me twice this year. I've had a lot of emails. Hey, Bill, remember me, the deal we did? I've had a lot of emails. Hey, we have a new program. One time. I haven't had anybody, professionally reach out, any lender of any type. And it's not in my business. I have this call. I have one on probates. I have 35 members of my team. I host a live event in Diamond Bar every month with 30, 40 people there. There are lenders that come to those events, and they sponsor those events, frankly, for the team members out there. But really, no lenders actually approach me to do business. It's really interesting. If you can get a lender to give you a pre-approval letter that looks right and have them call the listing agent, that's a big advantage. A year ago, hard to get them to do that. Today, you can get that done. And I've had buyers I had to say, hey, look, we need to change lender because this guy is not doing the job. In fact, when I was on the call, this is not the A team. The A team is going to call the listing agent and has a reputation with the listing agent for closing deals. Well, tell them they can close you quickly. And you want that to get the deal, especially now when you're coming with an offer below the list price, right? So the listing agent now, instead of saying, hey, we have an offer over your list price. Yeah, great, take it. Now it's, well, you listed at 800. I have an offer at 740, but it's real strong. I talked to the lender. They've got their down payment. So that's a big reason why it's a great time to buy now. There's a graphic I saw, and maybe you guys have also seen this on the internet. I'm going to share it real quick. That's phenomenal, just a phenomenal tool. If you're a buyer's agent, definitely show this to your clients, your buyer clients. Buying a house 6 months ago If the list price was 450, you would have had to offer 500 to win it, and 10% down with a 4.5% rate. Your payment was $3,028. Today, that same $450,000 listing, you can probably get it for $425, 10% down. The rate's 6.5. It's actually a little higher, 6.625 even today. Payment 3053. It's maybe what, $25 higher. I'll give you another advantage of this price. Here, your sales price, your tax is based on 425 instead of 500. Better property tax basis in California, better beginning basis for the long run. So definitely it's not as dramatic, I think, as people make it out to be. I think you'll see overall it's a great time to buy for buyers. Now, let me flip around and say it's a great reason to sell, great time to sell. Well, how can that be? Number one, taxes on property are not going to go down. In LA, we just approved Measure U LA, which raises property tax, transfer taxes on properties $5 million or more by 0.4%, almost doubling them. You say, well, what's the big deal there? Let me tell you, once politicians find a painless way to raise taxes, they're going to go back to that well again. It's going to be endless. And so in the long run, property taxes are not going to go down. They're never going to say, hey, we have more than enough money. Let's give you back your money. They enjoy having it. They'll find something to spend it on homeless people, whatever, environment, something. And so one reason to sell now is if you feel that the property taxes are high now, wait till later. You might want to get out now. Number two, it's easier to buy your uplink. If you're selling your house here to buy in another state, like a lot of sellers were in the last year or two, it was really hard. And the last thing a seller in Tennessee wanted to see was a buyer in California where the property is listed for sale. Now, they also have to consider the offer because the market's a little softer there. And again, if you have a strong lender who's calling that listing agent and letting them know, maybe interfacing with their lender to let them know they're legitimate, you're more likely to get your uplink sold. There's a certain amount of salesmanship that goes into those deals. And number three, sellers will consider contingent sales in a way they wouldn't before. So not only is it easier to find the deal, but it's also more likely a seller's going to accept your deal than before. So that's the reason if you want to sell, if you really wanted to move, this is a good time to do it. Not saying you should, but if it's a good time for you to move for whatever reason, maybe like me, you have a house, we're getting older and the upstairs is becoming a problem. Maybe we need to sell and get to a one-story more suitable for older adults. I don't know what the reasons might be, but if you want to sell, it's a great time to sell.
Yeah, Bill, I just want to jump in and just mention that in LA, with that one measure that allows people who are 55 to transfer their tax base, I've already been kind of hearing from some friends that because things are finally starting to like mellow out, you know, they're not having to compete so aggressively, and actually not having to aggressively compete. Now they're looking at, hey, this is a great time to take my tax base from my house that I bought 20 years ago, 15 years ago, maybe even longer, honestly, and go into a totally turnkey property with that lower tax base. So if someone's in LA, it's a huge advantage right now.
Again, great time to sell if it's time for you to sell. Okay, so how can it be both great time to buy and sell? It depends on your circumstances. But it's also a great time to invest. Why is that? Well, one, you don't need returns on your money. I mean, just because it's gotten volatile and the stock market's up, down, sideways, risky, cryptocurrency, whatever, falling out, Bitcoin down. If you have money and you want to retire, you have money, you want to live a life on passive income, you need someplace to get a return for your money. So the fact that that's difficult and that it's uncertain doesn't negate the requirement to make money. You got to find a way to make money. And so you need returns, and real estate has always been a great place to get returns on your investment. Real estate multifamily units is one. We have on the call Chris DeSell, who is with Cloud Capital LLC. I've invested with them. We have on the call, I just met Brian on the call today, but Brian has his contact info in the chat box and does self-storage. Again, ideal for return investors. So you need returns, then you got to invest, number one. Number two, and Chris, you might want to put your contact info in the box if you guys are still looking for money. If you're not, if you're all filled up, I'll keep you anonymous. Number two would be the money's going to go somewhere. The reason why cryptocurrency became really billions of dollars for basically digital nothings for a lot of it, is because people have money and they want to do something with it other than put it in the bank. They either don't trust the bank, can't use the bank, want to move, want privacy. There's a lot of reasons why. Store value. And so it's going to go somewhere. And there's ups and downs, but if you have something of real value in real estate, where the return on it as an investment is real value. Living in your house has a value of you living in the house. In my case, I live in a house and I use one room as a business office. There's value to that. If I didn't have the house, I'd have to go rent office space somewhere or work for a company and pay them money somehow. So there's real value, and the money is going to go somewhere. People are going to either buy buildings, or they're going to buy houses, or they're going to buy apartments, or going to buy something, and it might as well be you. And I think what's going to happen is a lot of money went into what I would call, what's the term I want to use? Superfluous requirements, luxuries. But I think that real estate at its core is an essential. People have to live somewhere. They have to build their office somewhere. They have to have, storage space for businesses. And I think if you stay in that space, there's going to be people having to do those things. And if you're there and priced right and set your business up correctly, you have a rate of return for your money. And then 3, you can investigate your properties. I've never met Brian. He's into self-storage, but these are properties that you can go look at and walk them and drive them, right? Dave Weinerman has projects. You can go walk the property and drive the property. Chris has properties or has had properties in the past. I looked at the properties. I'm investing my money in something that's real. Cryptocurrency, I'm a smart guy. I understand technology. I understood cryptocurrency. I couldn't understand how they were making money at it. I get the bigger fool theory. I understand, fooling somebody in a Ponzi scheme. Other than that, I didn't see how they're making any money in it. But real estate makes sense, right? You buy a property. I got pitched a property today, a condo in Palm Springs. You look at the sales price. You look at the rentals. If it makes sense, buy it, right? If I'm going to spend $1,200 a month and I can rent something for $2,000 a month, okay, I can afford to buy that. Or if I can buy it for $170,000 and get a $2,000 a month rental, if I can, then it makes sense. So money's going to go somewhere, but property you can actually check out. So those are 3 reasons why you might want to invest. You need returns, money's going to go somewhere, and you can check out your property. That's why it's a great time to invest in real estate. Always has been. All the other advantages of real estate are still true. Okay, so I gave you reasons why it's a great time to buy, reasons why it's a great time to sell, reasons why it's a great time to invest. I'm going to give you 4 reasons why it's a great time to build a real estate business. In fact, the best time in my career. Number 1, uncertainty is the time where people with certainty stand out. In a world of blind people, the one-eyed man stands as king. If you have something you're certain about, you have to be certain about everything. But if you're certain about one thing, you can do that one thing over and over and over again. If you have one investment, you may not know the whole real estate market, but if you can show your investment and the comps and the numbers and the details, and you have certainty that's a good deal, then you can sell it in a way that never before, because people are scared and you have to have certainty. So that's what you're looking for in sales. Sales is always about finding something you're certain about and helping solve somebody who has a problem who's uncertain about how to solve the problem. Number 2, there are plenty of people who are successful and older who are cashing out. I have a lot of friends in the business who made a lot of money over the last 5-10 years of their career, and they made it, and it's going to be a hard winter for them to restart their business, and they don't want to do it. They're just cashing out. And so if you're trying to build your business, you can step in and replace those people. I see this in more and more mini markets, niches. Somebody who was a leader in the market just is gone. And when you find out what happened to them, they cashed out. They made a lot of money. They retired. They're traveling. They're with their kids. Nothing wrong, no judgment. But if you're a competitor, that's what you want to step into that market. I would say number 3 is people who were successful in the last cycle, a lot of them are leaving because they can't make it. There are a lot of people who made money 2, 3, 4 years ago using social media, attracting buyers. That's not working for them today. Now they're all selling programs to get you to buy their program and advertise using their channels because they can't make money selling houses that way or flipping houses that way. There are a few people who are practitioners, like Pace Morby's example, who's actually doing the deal and coaching it. But most of them left the sales business or are trying to coach because what they are coaching you just doesn't work anymore. So there's less competition. The people who did business the last cycle and they tailored the business for that can't make it If you can find a way to make money in this market, you're going to be successful. And number 4, when the market is stuck, to a large degree it is. I'm not stuck. I mean, I'm putting something in the escrow thing tomorrow, a nice deal. And I took a huge listing last week. I'm busy. But I've stayed busy every workday, nonstop. The market's stuck. I'm not stuck. And that's why I'm getting business now. And I'm going to tell you that from where I sit, so many agents are stuck right now. They're scared. They don't have any listings. They don't have any escrows. They're watching the news too much. They're getting depressed. Their candidates won, their candidates lost, whatever all that's about. But when the market's stuck, if you're moving, you're going to be seen more. And you want the people you know to see you. Yes, Paul.
Hey, just real quick. So are you getting a lot of the new business that you're talking about from the same channels that you've been working all along? Or did you open up some new channels? Or did you bring on some new lead gen? Like, what do you attribute it to?
So you and I are friends and somewhat partners in this business together, right? So I'll be honest with you. And those of you on the call, I'll be honest, and this is being recorded. My plan is to rewrite my business plan in December. I've just been, now I had a personal setback. Unfortunately, my wife had to go to the hospital last week and just got out. So the last week in preparing for that has been another kind of chunk of time. I kept working most of the time. I didn't have any extra. And so that's been going on. But I haven't had time to plan. I've just been keeping going. What I want to say is for the last 6 weeks, I've just been talking to as many people as I can in person, online, social media. And to answer your question, I've not been as strategic as I might have been, but I'm talking to a lot of people. I've had a lot of appointments, and I'm generating business more than I need.
Mm-hmm. Are you doing a lot of face-to-face, or is some of it you breaking it up Zoom?
I think yesterday, so face-to-face, I do once a month. I do the Brew event, real estate networking in LA. You guys are all welcome to come to that. It's the first Thursday of the month, 5:30 p.m. in LA. I host at a bar, a beer event. We host the first Friday of the month in Diamond Bar, training for 3 hours. I do that live. The second Thursday of the month is the LA Real Estate Association. This event's Expo every month. I do that event live. That's the only thing I've done live other than yesterday. We locked out a client at really, for me, my largest listing of my career, $4.8 million. And I met the attorney at the property as we're locking out the tenant and going through that. And I didn't go to lock out the tenant. I went to meet the attorney. Because when you get a listing like that, that's to me, half hour each way is an hour. I was there for 2 hours. It was a 4 hour or 3 hour investment of time. But 3 hours with a referral source that can give you that kind of business is worth it to me. So I'm trying to, in that sense, I'm just making sure that I talk to as many people who can refer me business as I possibly can. And in terms of social media, just ramping up everything. And there's the Gary Vee model, which is just smother people with your attention. And people don't like me, will unsubscribe it. Fine, I really don't care. And people like me will go, "Wow, my God, Bill, you're killing me," and they'll just flip through it. Fine, that's all right too. Yeah. But as long as you recognize me, I don't care. It whatever it is working for me.
Cool. The Brew event is every first Thursday at 5:30.
Yes. Yeah. At the All Season Brewery on La Brea. Funny, free event, free beer. You think I'd get more people? You got to market it. Grant Cardone said. Now, for all of you, Grant Cardone says, even if you have the best product in the marketplace, demonstrably, or service, and you give it away for free, it's 10 times harder to sell than you would ever imagine. So here I have a networking event at a bar. The bar is going to get a couple hundred people anyhow. Meaning, if every other person in the bar just knew of my event, they'd all show up to get a free beer, theoretically, right?
Right.
If you think about it, okay, last month, Last month I had 30 people there, but there were 200 people else in the bar who, all if they'd known the event was going on, would have registered just for a free beer, theoretically. Right. That's how hard it is to market. And I'm saying that realizing it. I mean, like, that's just what you got to do. And I think that people's attention is more competitive than ever. But there's also tools to allow you to do it more effectively, more intensely than ever. So you got to do more. I talked to a guy at the LAProbate event last week. I talked to the speaker. What was his name? Great guy, Steve Matley. So his primary business is land sales. He was really, really good. In fact, I'm interviewing him on this call in a couple of weeks. He does live streams on Roku channel and this channel and that channel and this. I mean, he's like really got compared to my customers and my world. I have friends who think I'm a celebrity because I'm on YouTube, and I'm proud of the work I've done. I want to put it down, but I'm not that guy. That guy has, he's telling me stuff he's doing. I didn't know he's doing. It's like they have their own network and they have a TV studio and they do it all live. Like instead of interviewing one-on-one on Zoom like I do, they have people come to the studio and do it first rate and stuff. So look, this is a competitive industry. I saw Grant Cardone yesterday. He said that in order to get in front of more people, he can't scale his events business. So he's going on to TV. And in TV, he doesn't want to be beholden to the networks. So he's actually he's actually producing his own program. There's a guy who did a program, Undercover Billionaire, and was a big success a couple of years ago. He's actually filming his own real estate deal, kind of like a real estate Shark Tank deal, and do himself because you got to do more. And I think he's right. I just think, so to answer your question, I'm doing everything I can. I have some referral deals now with a couple of national vendors in the probate space. I have my own program on probate advances. I have this live stream. I have Thursday's Probate Weekly. I host on Tuesday Probate. I talk to people all day long. My goal is to talk to people from 8 to 5. I take an hour in the middle to take a exercise break. But I just talk to people nonstop. Not saying you all have to do that, but I think the key is the more people you talk to, the more business you do. I don't think there's any way around it.
Without question. Hey, Bill, speaking of which, the free beer place, I don't even drink beer, but I want to go meet more people, as you know, over on, you said La Brea, right? What was the name of the restaurant and when is it?
All Season Brewery.
Dave, you should definitely come down. It was a really fun time when I think I went to September's or October's. I can't remember, Bill, but it was a lot of fun. You should totally just make the time available. Come down earlier in the day and see if you can make like a whole, because you'll be there for a while, and it's a big, loud place that's a lot of fun.
You have ball games on TV for into football.
And are a lot of people there doing the networking that you and I would be doing?
No. So this is different. This is not a real estate network, walk around, hand out your business card. This is a chance to really meet people more one-on-one. So I invite people to come and we sit down and have a beer, and it's loud. So you can only talk to one or two people at a time. It's a little more intimate. But for me, it's a chance really to talk to people kind of one-on-one, which is fun. So there's a link to the event if you want to come to it.
And there's sports. You can see the sports on, in the background, and there's music, and Dave, honestly, like I think you would have a good time.
Even David had a good time.
So the next question, thank you, I want to go. Next question is I didn't hear, Bill, when is it? You said it's weekly?
First Thursday of the month.
Okay.
First Thursday of the month. And we do that first Thursday at 5:30 p.m. Yeah, and so the other thing so go back to the why do we do those events? So one of the challenges of events is, to me, there's two criteria if I'm going to go to an event. Number one, well, three. One is I'm going to learn something there I can't otherwise get. So if I want to learn something or see somebody, then you got to go. That's number one. Number two, if I'm going to go to an event from a network point of view, I want to dominate the event. I don't want to be like there's a LA Bar Association event. There'll be a bunch of attorneys there. There'll be a bunch of realtors there, a bunch of vendors there. I don't want to be one of 20 realtors in the room. That's just not me at all. But this event's my event. Everybody knows it's my event. I hand out free tickets. It's me. So when you meet me, it's special. So I try to encourage people, when you network, you want to be the guy or the gal that does something at that event. Either get there early and greet everybody. It looks like you run the place. Be there at the end and shake everybody's hand on the way out the door. But you have to find some way to kind of dominate the process. And the third part is consistency. We think that by meeting people, we get them into our lead generation system. And I think, again, when there's more business than anybody can handle, that's a great way to do business. But I think real business in a real market like this, it's going to be more about relationships. And so you can meet people, but that meeting is an entree to a relationship. And that's going to require, among other things, some consistency. And yes, I email out all the time, and I do social media all the time. Great stuff. But I think there's something magical when people see you at a meeting. I know it when I see them at the LAProbate event. 6 months later, a year later, there's a certain level of confidence they have in me right away. It just breaks down a lot of objections. And so when I get one objection, and they move forward on a contract, versus if I just met them and I'm cold calling them afterwards and they've agreed to meet with me, it's a whole process to get them to choose to do business with me. So again, it's really about, I think that everybody should have certain live events, but they should be ones that you control and pick, not happenstance go around to. Maybe you want to go to a bunch to do research and learn the lay of the landscape. Like if I was new in an area, I'd go to every live event I could just to see all of them and figure out where I wanted to be. But the strategy would be to pick, one or several to go to consistently, to be the leader of that event, be a service of that event, so that you're seen as a leader. It just makes the marketing and it makes the leverage of your time more valuable. I was on a free networking event this morning. In fact, it was Casey's, Dave. And, it's really nice to have him, kind of compliment me that, went to an event and he was there and like everybody knew who I was. Well, yeah, I'd been there, at that time weekly for, a couple of years and emailed them and social media. But it's nice to have people walk up to me and say, hey, I have this deal. Can you help me? I didn't really have to, sit there and ask people, hey, who do you know who's looking to buy or sell a property? I'm past that stage with them. Okay, so I just gave you guys, somebody here has to argue with me. 5 reasons why it's a great time to buy, and 3 why it's a great time to sell, and 3 why it's a great time to invest, and 4 why it's a great time to build your business. Right or wrong?
Well, I'm going to agree with one thing for sure is in the luxury market, Bill, which I haven't looked at real high-end homes, and really seriously in a really long time. They've come up on my radar in the past, I would say 2 weeks for sure. And I even got together with Brian, who, by the way, Brian's an excellent source for people, even if they just want to break down a deal. And I had this one deal I wanted to talk to Brian about because I haven't bought a really high-end property like at this level ever. And but it made so much sense to me numbers-wise, and that was the thing that he was drilling home is, well, you need to know your numbers first because this is a changing dynamic market, et cetera, and maybe there's an opportunity, but you'll only know that because the numbers make sense, not because you want to go live in it, but because you as an investor, you can make sense of it on the exit. Like you understand why you would even be getting into it. So I'm kind of looking at the luxury market myself right now, and I'm seeing some opportunities come up. So I do agree with you about what you said in that. I guess in some respects, that's kind of bad for some of these guys who thought they were going to sell their properties for $8 or $9 million that, they've now come down in some cases to 6 and maybe even less. But, that's, look, I mean, this is what makes this industry interesting is that things are starting to happen now. And it's like what you said, the volcano isn't exploding, but you can definitely see the cracks in the ground. And I think that's making some opportunities for sure.
Well, I do think that the market has significantly moved in certain micro markets. It sounds like Phoenix, Arizona, Austin, Texas, and the luxury market. I think it's one of those areas where it's really, adjusted, and that's probably the areas going to get hit most by the crypto effect as well. That's just starting, where there are people who international investors, transferring money. Look, if you're embezzling, one of the things in life, if you're embezzling money. Right. I remember in 2010 through 14, when you had this massive exodus of Chinese Communist Party members trying to plant their money in America because the government had not yet cut down the currency controls. They would buy anything. And if you bought a house that was worth $1 million for $1.5 million, you didn't care if you're in China, and if you could close while you're in China, because eventually the government's going to figure it out and clamp the money anyhow. It'd be worthless. But now at least you own own a property in America. And they'd send their wives and have babies in America, and their babies would have citizenship. They didn't care what the price was. And how do you compete with that as an investor, as a buyer? And I think, Miami's had that happen in the last year with various, oligarchs and crypto people embezzling money and all kinds of craziness on top of the normal market that, Miami's been a great city to live in for certain people. So it's one of those things where you throw the froth on top of the already hot drink, and it gets a little bit crazy. So, okay, so who wants to make a case that it's not a good time to buy a property right now? I get prices are a little higher, and I get mortgages. Am I missing the boat here? I mean, sales are way down. But
no, I've got to run. Nice meeting you guys. I'm going to go look at a property.
There you go. There you go. There's Brian going to look at a property, because it's a great time, Brian, to go look at property.
It is. It's a fix and flip. Not what I normally do, but I'm going to go look at it anyway.
There you go. And I think that speaks to, we'll let Brian go, but I think for all of us, it speaks to us expanding our product line from what we normally like to do to learning another little niche or piece. I've done more commercial business in the last 2 years than I've ever done. I made a lot of money doing it. It came to me because they were probate. And so I had to learn the product. I didn't have to learn how to market it. It kind of came to me as long as I was confident enough to handle it. So all of us have to kind of take a look at, I'm not suggesting lower your standards as an investor. I think the opposite. You have to look at more properties. And I'm not saying lower your standards as a syndicator. I'd say you have to work harder to get people to invest money with you. But I would definitely say there's opportunities there for everybody. Okay. Any other questions, comments about real estate? Any comments on the crypto market? Anybody have any other comments today? Chris, to sell. Go ahead. Yeah, go ahead.
Well, I was just going to kind of jump on your coattails a little bit in that you talk about maybe modifying your approach a little bit or pivoting perhaps to maybe expand the opportunities that are, presented to you.
Uh-huh.
And we have made a conscious decision recently to provide the same kinds of robust returns that with someone secured on a piece of property, their investment secured on a piece of property with $1 million or more in equity, to make it an easier decision to pull the trigger and make the investment for whatever, whether it be a 6-month term or 3-month term or a 12-month term. In essence, loans, but we're securing them. Whereas before, we wouldn't have paid the same robust return. It would have been a lower. It was a choice. You're secured, in which case there's almost no risk. You're going to get a little smaller return percentage-wise annually because of that, or you're unsecured, but you're in a great project and you're going to get the same return as everybody else in that project. So we've pivoted, like I said, a little bit in our securing folks with very robust returns, like 20% or more annually. And it certainly has helped me bring in some extra capital. Always looking for more, though.
Well, and I think, again, it gets down to, it's a competitive environment. One of the greatest business books ever written was In Search of Excellence. And it was a book by a couple McKinsey and Company consultants. And they reviewed the 50 top publicly traded companies in America, because the numbers are transparent, plus one private company, Hughes Aircraft Company, where I used to work. And they analyzed all the companies and why they're successful and try to get certain theses as to why they were. Now this is in the 80s. One was they did one or two things really well and focused on them. They used an example of McDonald's. In those days, McDonald's only had hamburgers, cheeseburgers, Big Mac, quarter pounder, filet of fish, fries, some drinks, whatever, shakes maybe, apple pie. A fairly limited menu compared to what they have today. That was their strength, and they built the company. But they had to pivot because the market forced them to add breakfast, coffee, dinner, all kinds of stuff. I don't eat at McDonald's because I keep kosher, but I've driven by and seen the menu. I've seen people buy stuff there. So my point of all that is to say that we all have to, be willing to work a little harder, not more hours necessarily, but do the harder work that we otherwise don't want to do. Learn, risk rejection, whatever that means to you, in order to get the same or more results. And so whether it be more product or change your product offering or something, we be smart about it. So cool. Anything else? Anybody else have any questions, comments? Anybody else here invested in cryptocurrency other than Bitcoin? Have any interesting stories they want to share about trying to get money out of those, or no? I never did pull. I still this day I'm kind of embarrassed. I never bought anything. I'd like to have something just to play with it, but Not today.
One of the guys, Bill, at my Vegas group, he actually wrote a book on investing in crypto, and he is one of those guys who is just starting to, even after years of knowing how to do it, he is just starting to do transactions using crypto. And I am still in that total beginner phase with respect to crypto. And I just, I don't have the comfort level for it yet, but I know it's out there. I know it's something I'm going to have to just figure out. So, if anyone on this call does do anything interesting with crypto, I'd love to hear a deal story. So,
funniest thing about it is what I'm told all the time. I was told up until 6 months ago or so. I guess you just don't understand it, and I would say, no, I understand it completely. It just is. I don't see the business case that you create value for somebody that's going to cause them to do business with you. I get if you convince somebody to buy something for more than you paid for it, it's going to go up. It doesn't mean it's a business. It just means it's speculation, and nothing wrong with it. If you're a speculator, just call yourself a speculator. I'm not. I'm a business person. So
right.
It's just interesting to watch and to see so many business people with egg on their face. I saw Kevin, what's his name, from the Shark Tank show, basically say he was wrong. And here's a guy who said he vetted this FTX. He apparently didn't. Apparently nobody did. I mean, at the end of the day, nobody was looking into what these people were doing. That's the part that's most scary. Is all these sophisticated investors weren't doing basic due diligence. Just really crazy. And when you're not regulated, I think when you invest in, like I've invested in different investments that are regulated, I don't think it's the regulators that are going to catch the person we're investing with. It's the investment companies can't stay in business very long without learning how to comply with the regulations. That forces them, in my way, that's called the hidden hand of capitalism. Because they're regulated, they actually have to do things for the most part the honest way. And the vast majority of real estate syndications have been legitimate by percentage, way more, cryptocurrency problems than real estate. So not to expect that all the financials were turned to the SEC and audited, but the fact they have to send them into the SEC at least forces somebody somewhere along the line to pay attention.
Yeah.
Anything else? Chris, what's up with you, man? What are you guys working on? You guys have anything available you're raising money for actively, or what's going on?
No, so we underwrote a lot of deals this year and nothing really penciled. Everybody wants last year's prices without reflective of what's going on with the present economy,
I do.
right?
I do. Thank you.
And but it doesn't really make sense. So I just got back from Texas for a week, and we had a lot of great meetings with some pretty big banks who we thought it was going to be 2024 where there's going to be a lot of multifamily coming back on the market, because a lot of the teacher buyer groups, like the guys that pay me $50,000 and I'll teach you how to they went and put bridge debt on everything. Right. And a lot of those bridge debts are either ending or it's going under their DCSR under 1.25. The banks are going to come in and take over, and so they approached us to say, get ready. So we think by the second quarter of next year, we're going to have 3 or 4 deals. So
I heard a scary conversation yesterday on that subject with Grant Cardone, one of my coaches, one of my mentors. He said that unlike those groups, he always got insurance, interest rate insurance. So what Chris is describing is investor groups would buy a property that needed value add to it. So they buy the property and have money for the value add, and then plan to refinance in 3 to 5 years into longer term financing. And they would need and there's a product where you can insure the interest rate so that when your bridge loan's done and you need your permanent financing, you could have, back when rates are 4%, guaranteed a 4% rate or 5% rate going forward. But it wasn't cheap. It cost a lot of money. And as rates went up, the insurance got more costly. And there are people closing deals. Deals are falling apart because people couldn't finance the interest rate insurance, and other ones didn't want to pay it. But what Chris is describing is there are other investors who just never got it because the people investing with them were sophisticated enough to look for it. And so what's going to happen is a deal that made sense at a 3% interest rate market and now comes to market for new financing at 6 or 7 isn't going to pencil out. And if they don't have extra equity, and if these investors raise enough extra money, they're going to have to sell the property, and they'll sell it when they don't want to have to sell it, or the bank will help them sell the property. So I heard, I'll tell you what's scary, Chris. I heard yesterday Grant Cardone talk about that, and he said he felt that he was protected in that all his projects had interest rate insurance behind them, but his biggest fear now is the companies that sold him the insurance might fail, because he says there's so much interest rate insurance, and really, was he paying enough attention to check that those guys had the capital? Those are the same people investing in cryptocurrencies, these investment bankers and such. So he said, if those people go down, I'm sorry.
I'm sorry. So did he hit his caps too then by now? Like, you know,
I don't think so. I think he's talking more about projects he did in the last year or two that aren't yet due. He was saying that's his current concern, and he's trying to figure out, do these insurance rates that he paid for, do they have the capital? Because they're going to have to pay, right? When you take out an insurance plan from State Farm, Farmers Insurance, you assume they're going to pay, and for most of the time they will until they don't. That's why they don't insure, for example, floods and hurricanes. Why? You as a taxpayer insure that. We have insurance programs as taxpayers. It's never ending, and they just always lose money. No insurance company would ever really insure that. These interest rate caps are done. It's called insurance. It's really just a gamble, or it's an investment pool of money. But at some point, who's behind all those people? Well, I remember when I grew up, I worked for Great Western Bank, and their tagline was, Great Western Bank will always be there. Well, guess what? They're not there anymore. Why? Because they bet on all these negative advertising loans that would last forever. And they were right until forever happened in 2008 and 9. So anyhow, just kind of a interesting thing to pay attention to, Chris. And if any of you guys, while we're talking about, have questions or find out anything about that, I'd be interested to see. But who is it that does these interest rate insurance policies, and what's their capital look like? Because I can imagine a scenario where they weren't careful with their money, and next thing you know, they're saying, sorry, we can't help you. And sure, strong investors will raise money and get through it or whatever, but it could be a problem a year or two from now.
I was told that people aren't even selling cap rates anymore.
Hard to get. I'm sure it's very hard to get.
And very crazy high, of course. So.
And on the flip side, there's still loans, like for multifamily. There's still banks doing multifamily loans, non-Fannie Mae, Freddie Mac, at rates below 7%, which surprises the heck out of me. But they're 5-year, 7-year loans, and so you have to have some game plan. What are you going to do 3, 5, or 7 years from now? Because traditionally you would get a longer term Fannie Mae loan.
The LTV though is gone now to 55 to 60. So for me, that makes it a little harder. So, you used to have to raise like by 6 to 10. Now it's going to be probably like 10 to 14, So, but it's, but that, the cool thing on the reverse side is it's a much more stable asset as opposed to like a crypto or something that could just vanish in thin air. You know what I mean? You could go touch the apartment. So, it's not like a paper stock. So
there's some value. There's some real value to it. At some point, it might be less. Theoretically, with a bad economy, you can make a case that rents drop 25%, and that might make the value drop 25%, and that would cause you to lose some money. But at least you have a property that's there and is worth 75% of what it was. A crypto, that Bitcoin, the FTX stuff, it's worth zero, or it's worth a lot. You just can't get it out.
Which is worth zero.
Depends. They say if you don't have the keys, you don't have the crypto.
Right.
So those people can't get their crypto out. It's funny. I've been watching on Twitter all these people talking about can't get their money out. George Abraham, how you doing, man? Speaking of big time investors.
Good afternoon. No, I saw the crypto topic though, and so it's something I've been involved with for a number of years. And I actually just came back from Puerto Rico, which is like the capital of cryptocurrency. It's where all of the Act 60 investors go to take shelter from capital gains taxes. So I have a fair amount of experience with that.
What's your current read on what's happening of late?
Well, this week has been, I guess, monumentous in terms of I guess I would liken it maybe even to like a Lehman moment, as far as like real estate goes with FTX. So the dust hasn't settled yet. It's a little uncertain as far as how far the contagion is going to go. Just kind of like with Lehman, with crypto, all of the various exchanges and entities are kind of intertwined. They all lend and buy, and there's a lot of arbitrage going on. And in this case, there was this entity that was trading with customers' money on behalf of FTX that nobody really paid attention to. So the contagion aspect is still kind of unknown as far as where the dust settles and where it's going to take things. Long run, I don't think it changes much. I think if anything, it's just going to prompt Congress to take a heavy hand on this because so many people are hurt, just like was it Dodd-Frank, right, where they came back and brought in all these regulations. So if anything, it'll kind of expedite, I think, what regulations need to take place, just like COVID kind of expedited the use of technology and how we're kind of working from home more. If we wouldn't have had that situation, probably a lot of the technology that allowed us to do what we do remotely wouldn't have taken off. So sometimes, bad can create good in the long run in terms of accelerating regulation. And once things get regulated sufficiently, kind of like Wall Street, then that should bring it, open it up for more, let's say, traditional investing, 401ks, people that feel like they need that, safety, which they should. It is a little bit like the Wild West in a sense, unfortunately, for better or worse.
You go back and look in time, you look at Enron was one of the big, similar blow-ups. But when you saw the guys in Enron, they sounded good, they looked good, it looked real to you. Lehman Brothers, traditional Wall Street companies, sounded sophisticated. You kind of Bernie Madoff kind of sounded like a legitimate guy. It had the errors. When you see the CEO, this SBF, and his CFO, I'm thinking, what kind of clowns would put any money in their hands? I don't get it. The first time I saw him, that's what I thought. And I remember seeing my daughter's really into Tom Brady and my wife as well. And I remember seeing a video he did with Tom Brady, thinking, who is this clown? How could he be worth $28 billion? And I'm not saying that he's unkempt and maybe a little sloppy. He just wasn't articulate. You listen to Elon Musk; he's like otherworldly smart. You may not like him, he may be brash or whatever, but he obviously is unworldly smart. And you see some of these other tech people; they're just so smart and organized and impressive. Those two are two of the least impressive people. I wouldn't give the guy $100 deposit for appraisal on a real estate transaction. Who would ever thought these people are responsible human beings? It's beyond me. I don't know how that happened. I just don't get how that happened. It's just amazing to me. Okay, this is being recorded, so I gotta be careful what I say.
Yeah, but someone I know has access to the recording.
Yeah, well,
yeah.
It's interesting how the power of celebrities can really convince people. I don't know if you've followed who has FTX sponsors, but you mentioned Brady, Steph Curry's one of them. There's a number of others. And they kind of influence the masses. Obviously not folks that critically think or do diligence, but there were some big players that had money tied up in FTX. Galaxy Digital, for one, and
I follow Ask Kevin.
Go ahead.
I saw Graham Stephan. These guys, I remember them pitching. Thinking, these guys are clowns. They're good entertainers, but really, who would invest money because they tell you? Obviously, they're getting paid. They're not doing any due diligence. They couldn't. Yeah. They could look at the financials and figure out what was going on behind the scenes. I don't think. I get it.
It's snowball. It reminds me of the young lady from I think it's Theranos that did the whole blood gimmick that kind of. But again,
she looked. If you ever saw her speak, she was articulate. She sounded intelligent. She looked the part. These two. I don't get it.
Yeah, I
won't let them babysit my child, either one of them.
Hey, George, were you talking about that one where they made the movie about her?
Fairness. Yeah.
Yeah, right. Yeah, where big time investors got involved and that legitimized the project because of who was backing it. So I think in the same way, popular faces or even big players in crypto like Binance were one of the initial investors. It kind of legitimized it. But yeah, no, I agree with Bill's take. I listened to this Sam person and I kind of feel the same way about him. And so I don't know that people are following him per se, but I think it's more they just get caught up in the wanting to make a lot of money and get rich quick. Unfortunately, kind of appeals to maybe that younger generation that's, been through difficult times with the last recession, and they're being held down for a lot of number of reasons. So it's just easy to get caught up in that. But no, he doesn't strike me like a Brian Armstrong, like the CEO of Coinbase or CZ from Binance, who are, like you're saying, articulate business people and are surrounded by other business people. And so, yeah, it doesn't surprise me. And I don't know if you saw his apology on Twitter, but it was a joke.
Pathetic.
Yeah, he said, I messed up. Sorry. I know it doesn't make it right. Sorry.
Like a high school kid would write like that. I mean, it was just pathetic. Yeah. It was truly pathetic. I remember.
Meanwhile, he's not no one had insurance on that one, right? He's not giving any money back.
Bankruptcy proceedings, I think, is probably the only way people will try to get their money back. Unfortunately,
well, it's not like he might have hidden money and using cryptocurrency under who knows where. It's not like
they got hacked, but I don't know if that's really an inside job. I think a lot of people are suspicious about it just because of the timing. It was the same day they filed for bankruptcy. I think 400 million kind of vanished, but it's going to get tracked. Of course, it'll get traced back. So, he probably did try to have a little parachute there.
I'm sure
he was a little late in preparing for that parachute. He should have done that on day one.
We're assuming
if he was as smart as he wanted people to think he was.
We're assuming he didn't. They're assuming he didn't put some away. I mean, there's no way to know that. The whole thing is just.
I don't think he saw it coming, especially as quickly as it did. I mean, he had it like they're saying, kind of a house of cards, and he got rug pulled, and it all just toppled within a matter of days. So I really don't think they saw it coming.
One thing is I've learned, and it's true in politics, it's true in business. If you can't challenge somebody and they can't respond, something's wrong with them, right? And I think that in business, here's a case where I sure like to see somebody who asks him some tough questions and see how he answers them. I've been looking online. Did ever anybody actually interview the guy and ask him tough questions? I didn't see it. I still haven't seen it because there's something. And what happened, I'm guessing, is there was a whole population of people who saw the story and were able to figure out how they could use it to make money, and they were just glad to do it. And he was just the platform for them to sell this story and make money off of it, because it's inconceivable that you would invest money with a guy like that. I just don't. Isn't it obvious? I don't know. Is it me? Am I a bigot or something? I don't know. Is my BS detector that well honed? I don't know. But it was the second I saw her, I had never seen her before. I thought, and not just physically, just her talk and her mannerisms and her vocabulary. It was like she's like a teenage girl. Over a $28 billion enterprise. How does that happen? Who would give her be the CFO of a $28 billion company? I just don't understand it. Another one of those things, I have to go to bed tonight and say, how does that work? Anyhow. Well, George, where's a good place? Somebody who's interested in cryptocurrency and investing and making money.
After that, right?
Where's a good place to put some money? What are you looking at, or what do you have your eyes on?
As far as crypto goes?
Mm-hmm. I would buy Bitcoin right now.
Yeah,
if I could figure out. If I had an hour to figure it all out, I would do it. I've just been so darn busy. You can't just go into my TD Ameritrade account and buy it. I would buy $10,000 just to have it. Sure. I think it's a great price right now.
Yeah, I think if there was one, if I had to pick one, if there was the least unsafe, I'll qualify it that way. For some people, it probably would be Bitcoin. Just like if you think about like the .com bust, right? There was like thousands of .coms, right? But then there was always like the biggest one was going to make it, even though it was going to take a hit. What was it? Amazon went to like $7 before, it emerged from the dust. So I think in the same way, there's going to probably be a lot of crypto projects that fail, but then the biggest by market cap, by volume is going to be Bitcoin. And the SEC chair Gensler said that it's a commodity, so that's kind of assuring in a sense that they're not going to regulate on it as like an unregistered security like a lot of the other ones are. There's others, but if I had to pick one, I suppose I would say that. This is not financial advice. I'm not qualified to give financial advice, but I would have to say that. I think as far as projects, I think DeFi is probably going to have the most opportunity to really change things in the future, as far as like smart contracts go. And you guys know from real estate, sometimes it's really inconvenient and time consuming to send money, and the cost associated with it can be really high. I know during COVID, I had to wire money for a property, and they wouldn't let me in the bank. I had to make an appointment. It wasn't for another 7 or 8 days that I could even get in the bank to make the appointment to wire the money. because the amount that I wanted to wire was in excess of a certain threshold that I could do at
Right.
home on the computer. So
I remember. Right.
it was something that, if I had
But-
crypto for, I could send in 5 minutes, and it would only
Maybe.
cost me $5.
Maybe not, because you have to think about where would you have the crypto. Now, if you have your own keys and you have a way to transfer somebody else, yes. If you have on an exchange, you could imagine exchanges still have a certain responsibility and reputation. And so I can imagine exchanges having the same, I bank with Wells Fargo. They have certain limits on wire transfers, and I went through the same thing a couple of times myself. But I can understand they're not doing it because the law requires it. They're doing it for their own protection of their reputation and of my account as a consumer. You might say it's archaic, then don't bank with Wells Fargo. I could have banked with another bank that would have been more aggressive, but part of Wells Fargo's thinking is that is part of their reputation, for good or for bad. I'm not necessarily advocating for Wells Fargo. I'm saying somebody made that marketing decision that was the policy. That's not the case at every bank. And if you know the president of the bank, they'll wire whatever you want. And there are people who bank at small banks for that reason. There's nothing wrong with that. But I'm not so sure cryptocurrency, you should assume there will be exchanges that you can make your own money. But imagine your whole life savings being in crypto. Would you want to be with an exchange? And would you want to be an exchange that you could send all at once? Maybe the fact that it's limited to 50,000 a day is a protection for you. Just something to think about. I'm not saying
Sure.
you're wrong.
Sure.
I'm just saying I can understand why some companies would put a limit and others wouldn't. Because there's different ways to protect people.
Yeah, there is. There's different, and thanks for pointing out Wells Fargo. I didn't realize it was just Wells Fargo. That happened to be my experience too. So that I guess that maybe is just them. But with crypto, I mean, you don't have to keep it on the exchange. You can keep it on, like you're saying, cold storage, which is like a USB that you have your coins on, and then you can send it that way. Or you can keep
How
it on
many
the exchange.
How many people have you heard of who had a cold storage and lost the USB? And isn't there some guy right now who bought like a trash dump and he's now trying to go through it to find the USB because he's sure it's in there, right?
Oh yeah, I read a story where a guy, I think he had like 8 attempts to unlock his password, or 10, and he had used 8 of them, and so he only had 2 left. But there was like $250 million on the device, and so he's waiting for the technology to eventually come out where they're going to be able to crack it for him, because he can't remember his password. So he has it, but he doesn't.
He has it, but he doesn't.
Yeah.
As long as he holds on to that laptop. That's the other thing is, on one hand, I don't have that much money, but I do have enough things that are of value to me that I want to safely store physically. Not such a simple thing. What if there's fire? What if there's robbery? What if there's this? What if there's that? So, without getting too personal as what's going on in my life, if I had $250 million in crypto, where would I keep it? Where would you keep? Let me ask you, where would you keep it? Would you hide it in your house? That's a problem. Even if it's hidden forever, your house could burn down, your house can flood, you physically might have to flee and can't get to it, or you're out of town and something happens, you can't get to it.
I
It's
had a
not so
very
simple.
big safe in that house that was fireproof.
Like in my old house, I had in the garage, because our garage door closed from the outside, you could get in the house.
Oh.
And so we actually cut in the concrete of the garage floor a safe. So nobody could see it because I could pull my car in, close the garage door, and I could access the safe. And it was a place you'd never, unless you happen to be looking in that spot and you knew to look for concrete somewhere, but it was an unlikely spot. But what if I was out of town and some emergency happened? I couldn't access it, right? There's a million different scenarios. So it's not so simple. It's convenient to have on your phone, but it's also risky. So
Yeah, there's ways around that. But what you're reminding me of is kind of like how the FDIC only insures $250,000, right, at one institution, right? So if you're, let's say, have like $1 million, you can split it among 4 different banks, right? So the same idea exists for crypto. So if you have more than a certain amount you're comfortable with keeping in one location, you can spread it across different ways. You don't have to keep it on the exchange, but if you wanted to, you could, and then you can just whitelist certain addresses. And so by whitelisting, that means that you've identified certain addresses that it'll only go to. So if you get hacked and somebody tries to use a different address to export or extract your money, they can't. It can only be those certain addresses that you've pre-designated being able to withdraw it to. So that's one layer of protection. Of course, 2-factor authentication is another one. There's wallets that are not considered cold storage. I mean, your money's still on the internet, so technically it's unsafe, but it's not on the exchange. So for example, Coinbase wallet, that would be different than being on Coinbase exchange. And that's kind of one step removed because it's not subject to bankruptcy proceedings. So if Coinbase goes under your wallet, you would still, because you have the keys again, you can still have access to those funds. So there is ways of mitigating risk, but I don't think of it too much differently than, like I was saying with the FDIC, having $250,000 in this bank and $250,000 in that bank and $250,000 in a different place.
Yeah. I mean, and look, I've been in probate, so I see people who pass and, where are the passwords and how effective are you telling your family where it is, whoever it is, your trustee or your wife or your kids or something. So these are, I'm not suggesting it's not solvable. I'm just saying it's not without its own complications. That's all.
100% agree. Yeah. That's why they get paid to be custodians. Coinbase does. They're custodians for a lot of the institutional buyers.
Right.
Guys, I have to interrupt. I apologize. I have to go though. So Bill,
thank
you.
We're gonna wrap up. Thanks, Dave. Thank you for being on. And
always great to be
George,
here.
nice seeing you. And Chris, always nice seeing you, Chris, man. It's been too long. And,
Chris, nice to see you.
Let's get in touch. Hey, we're gonna wrap up here. This is our Tuesday LA County Real Estate Association Investors meeting. We do it every live stream every Tuesday, 3 p.m. Pacific, 6 p.m. Eastern. It's live stream on YouTube and Facebook and social media. Come out to our Real Estate Expo, first Thursday of the month in Los Angeles and Culver City. Love to have you. This is Lloyd Siegel's program. Hope you guys have a great week. We'll see you next week. Thanks, everybody.
Thanks, Bill.